The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Eastern Time, Wednesday. It's Fed Day, folks. We got a lot of earnings coming out. We got a Fed decision at 2 p.m. Eastern Time. We have a press conference that follows at 2:30 p.m. Eastern Time. Microsoft and Google last night, decent earnings ahead of expectations. Both of those stocks trading higher. We'll see where we go today. You got Meta out today after the bell. We got Apple and Amazon after the bell tomorrow. We got companies much more than just Microsoft and Google out with their numbers last night. Visa, Boeing, to name just a couple that we'll jump through this morning. But we kick it off with the S&Ps, right back to where we started off yesterday, right? Forget about the downdraft, folks. We're right back at 39.60, right where you were trading at 8:30 in the morning yesterday. You dive down to 39.13. You get it all back, and then let's jump to Microsoft, man, because you talk about an outlook. Markets, Microsoft ends at about 251, come out with the earnings at about 4 o'clock, actually trades lower to 243. Conference call begins at 5:30 p.m. Eastern Time from Microsoft. Microsoft, they put out a decent outlook for the year. The market was very happy. I'm trying to get the exact number for their outlook. Here we go. Because at 6 o'clock they announced their outlook, and that's what sent the stock going from 250 to 270. The yearly outlook for Microsoft, strong numbers there. Let me see if I have it up. I thought I did, but not quite pulling it up right now too quickly. All right, I'll get it up nonetheless. But Microsoft, that was the pop there at about 6 o'clock during their conference call for the yearly outlook. They jumped to 270. You're back to 261. You jump over to Google shares. Google with some volatility after the bell as well. You could have made the case that Google's the one that's going to be in the ad business, right? That all of them been getting hit. Google pops higher on their numbers, pops higher on the earnings call as well. Google's trading up about $4 this morning from 105.44. So S&P's up 36. Tech stocks with Microsoft and Google leading the way, up a solid 1.5% right now. Dow up about half a percent. The Russell up 0.7%. Bitcoin getting a lift this morning. Bitcoin trading up about $400. That's 2%, 21,350. We got crude. There's some acceleration for you, man. Not sure what just happened at 9 o'clock in the morning, but crude dropping like a rock from 96 to 94.65. We're going to talk to our man Teddy Kegstad from forex-trading-unlock.com at 40 past the hour, as we do every Wednesday. And folks, if you haven't yet, check out the Tiger Forex Report. Teddy just kicked off that newsletter a few weeks ago, this month only. Basically, that's the rest of this week. You can lock in 25% savings for the life of your subscription by using Teddy25. We'll talk to Teddy about a little crude as we got some crude action this morning. We got some dollar action. Always nice that we get to talk to Teddy on Fed Day as well. Gold contract, negative about $3 this morning, down about 0.2%, 17.32. And we jump to notes and bonds on Fed Day. We got the 10-year right now up about 3 ticks, trading at 119.30. You jump over, you're looking at a yield of about 2.78%. How about the action last week, right? To end last week from Thursday with a 117.5 handle, you could say, trading up almost 3 full points by Friday. Yields just cratering between Thursday and Friday's action. 119.31 right now. Notes and bonds somewhat muted as we sit near 120 on the 10-year with a yield of about 2.78%. And we finally had some action on the VIX yesterday. They were talking about it in the Tiger's Den. You spiked from 24 to 25.31 this morning. You open almost back to where we were yesterday with the market recoiling. So we've dodged one day of earnings is one way to look at it, right? Talk about optimism or pessimism. Feels like you just got to dodge earnings, right? What happened to looking forward to earnings for strong companies, a strong economy? There's so many risks out there, folks. Doesn't it feel like you just got to dodge this week, right? These companies got to avoid kind of the surprise that Walmart gave us, maybe Monday after the bell. Nonetheless, today we keep going with Meta shares out with their numbers, and everything's higher this morning, folks. I mean, especially because you got Google in the ad business. They're up, right? So Meta trades from 158 about to 162.50 this morning. You have Microsoft. They're in the cloud business. They're in the business. Amazon shares catching a lift by more than $2, as is everything with the market. You got the S&Ps up almost a full percent. You got the NASDAQ up 1.5%. Just like yesterday, I was talking to our man Kevin Hincks, right? We're talking about McDonald's. McDonald's had a strong day yesterday, man. They did come out with strong numbers. I was talking about during the program, saying, Kevin, they're pretty strong numbers. What do you think about a flat? You know, they were getting hampered by the market being lower, and that's a strong day. I think it was our man Dave White talking about quite a candle there for McDonald's. Up to 257. You see it. Just engulfs everything there. Yesterday's candle action to 257. We'll see. I mean, you're just bumping up to where you are recently. You want to see it get above this 255 to 260 area, folks. You're trading at 256 right now for McDonald's. Actually, a little bit lower for McDonald's shares this morning after the strong day it had yesterday, even with the markets accelerating higher in a big way. All right, so let's jump into the Fed action to kick things off. We got a press conference at 2:30 p.m. Eastern time today, folks. Get ready for it. So here's what Bloomberg surmises. Here's what to expect from the Fed's policy review today. All expectations are 75 basis points, folks. 100, not quite in the scenario this time going around as opposed to last time. Possibility of a dissent vote is what they may be looking for. How worried the Fed seems about the economy will be the key. All right, it's going to be a lot of nuance here because their path is basically set right now. So the market's going to be looking for keys in the press conference. The size of the hike, okay, the markets were starting to price in 100 basis points increase soon after those towering June inflation prints, but that positioning has mellowed in the face of comments from, you have a couple out there, Governor Christopher Waller, St. Louis Fed President James Bullard, expressing the preference for 75. Look for some dissent. The statement, the press conference, what I will say, folks, is the last data point we have is inflation at 9.1%. There is no room for any type of dramatic statement, in my opinion, from Chairman Powell. What he has to say about the economy, that'll be an interesting one. They're going to say they're going to be led by the facts, and right now the facts are that the job market is strong. Their mandates are full employment and stable prices, folks. We have unemployment at 3.6%, and we have inflation at 9.1%. Please remember that when you think about the Fed. Say it again, right? Because it's so important. The mandate is full employment and stable prices. We're at 3.6% unemployment. We got 1.9 jobs available for every American that's unemployed right now. And then you have inflation at 9.1%. Which one should they be focused on? Inflation to the nth degree, right? Well, we'll find out at 2 o'clock, and we'll jump into it. It'll be an interesting one, to say the least. Some of the other data out this morning already. Mortgage demand declines further even as interest rates drop a bit. They might have dropped, folks, but they dropped to 5.74%. What happened to 3.5% just more than a year ago? Average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances, that bumps it to about $647,000 or less. 5.74%. Demand for refinances down 83% from a year ago. That makes sense, folks. You know, there's going to be people who want to refinance. They have to refinance for whatever it is. And what I will say, folks, if you got to pull money out of your house or something like that, or you want to at these price levels, right? Interest rates may go back down. You're not locked into that forever. That's the only thing. You know, some people think you're going to lock in a fixed rate mortgage. Yeah, there's a lot of fees on there. You probably can't do it more than once every 2, 3, 4 years, something like that. I imagine fees, those rates may come back down. We'll talk to our man Kevin Hincks. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps. You're up 40 points right now. NASDAQ 100, you're up 195. Markets even climbing into the opening bell right now. We got highs of the session at about 4 in the morning, but outside of that peak high, we're coming into basically pre-market session highs within a few points of that level in the NASDAQ 100. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, fast market on the TD Ameritrade Network right here on Tiger TV, streamed live. Your hosts, Kevin Hincks, Tom White, break down the day's market action. And today's going to be a great one, folks. It's Fed Day. We got Meta after the bell. We got Apple and Amazon tomorrow. We got Microsoft and Google moving today. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Welcome to Sensory Overload. Oof. Is that what we have today, Tommy? Because, you know, there's a lot of information to go through, a lot of things to process here. But if I could sum that up in one sentence, it would be relief rally. Uncertainty becoming less uncertain. Tommy, and even though Boeing, Microsoft, Google Alphabet all missed on the top and bottom lines, things aren't as bad as they thought. And that's kind of the theme of this earnings season. You know, Microsoft, slowest growth in 2 years, but they put an upbeat outlook. They said some of the currency problems are going away. Boeing, right, they lost money, but still their free cash flow is a fraction of what it was. Google Alphabet, you know, the problems at Google Alphabet are less than expected, and that's a big issue there. So all things considered, Tommy, this is a relief rally because the world as we know it is less uncertain.
You know, Kevin, well said, man. I agree with a lot of what you said there. And I was going to ask you, because I started off the program and I said, you know, it kind of feels like this week, especially on the earnings front for the big tech stocks, that you got to like dodge a bullet, man. It's not like you're like, oh, let's see how the biggest companies in the world have performed and if they're making more than we all think. I just as a trader, I'm like, man, as an investor, right? It's like, we got to make it through this week, man. We got to make it through this week. And we made it through Tuesday, Kevin. We're on to Wednesday. But two of the companies, Google spiking right away last night. They were the one, ad sales, right? Digital ad sales especially. Economy slowing down. Google spikes immediately. Microsoft puts out the outlook. You said it. Boeing's got some strong numbers. Visa had some great numbers as well, man. They're a little bit lower this morning, but they spiked to 220. They're at 211, off with about $1 from where they are, but they've been behaving pretty well this year, trading at about 215 or so coming into yesterday. And, of course, we get the Fed today, Kevin. Always interesting when the market bakes in 75 basis points. Not usual times in this market. What are you looking for the Fed at 2 o'clock, press conference at 2:30 Eastern time to follow today?
Yeah, right. With everything we're talking about, Tom, we haven't even got to what might be the most important part of today's day, and that is Jerome Powell coming up at 2:30 Eastern. I think he'll stay somewhere between 50 basis points and 75. I don't know which one. I didn't think he'd go to 75 last time, but he did because of late data. Well, we've got some late data here. We'll see what that does to him. But, Tommy, his guidance for the second half of the year, his view of the next 6 months and how he's going to treat that. Is he going to take a break? Is he going to slow down? How is he going to describe the U.S. economy, which is clearly slowing? Tommy, I want you to think about something. June 15th. The last Fed meeting, crude oil was $120. Now it's $95, right? So if you just think of it like that, inflation as we know it is coming down, right? The grains are lower than they were. I've said this on your show a couple times. So how's Jerome Powell going to describe that and put that, just like a CEO, how's his guidance going to be for the second half of the year, Tommy? It's going to be must-see TV.
It's a great point. You've talked about it at least once when we were on the program before. I almost forgot about it, man. Time is flying so much. Crude prices almost at a peak at that level. I just had it up on the Thinkorswim platform as you were talking about it. And I remember what you also said, right, is where interest rates were at that time. I pull up even the 10-year futures right now. I mean, you're talking about we had a price level of the 10-year. What were we approaching, Kevin? I think 3.5% at that time. I think we're sitting at about near 2.8%. You've traded up almost 6 full points from where this thing was trading at on June 15th. We're sitting at 120. You're at about 114. That should ease things a bit as well, man, because, boy, we're approaching – well, we were almost talking about we're going to hit 4% on the 10-year, man. We're now back under 3%. So he'll have some stuff to talk about. We get Meta after the bell as well, Kevin. We got a lot to talk about. What are you guys going to be chatting about on Fast Market coming up at 12 today?
Well, Meta will be the focus of today's show, Tommy. I know we'll also look at Qualcomm. The third name we're discussing right now, it'll probably be something maybe TODD, maybe Etsy, maybe Lam Research. Ooh. Remember, tomorrow morning you've got Southwest, you've got MasterCard. So we're trying to figure out what's the best one to do. But certainly Meta Platforms, certainly Qualcomm today.
And those last two you listed, some fan favorites, of course. And what do you think, Kevin? I'm going to jump to a little crypto real quick because I saw the headline today. Kathy Wood, she's into some of those equities that you mentioned. Coinbase, she was dumping Coinbase big yesterday. They seem to be in the press 24/7 right now, whether it's former employees getting arrested for insider trading, whether it's probes, whether it's just the fact that they got tough earnings or Bitcoin or whatnot. What's your take on Coinbase with Ms. Kathy Wood selling some of her shares? This thing's almost at a low, man, down from $4.29 when they go public to $52.93 for Coinbase right now.
Yesterday's SEC probe into Coinbase, and here's what. Now, follow me now, Tommy, because this gets a little tricky. Bitcoin, as we know it, is under the purview of the CFTC, right? Because they've been dubbed as a commodity. Well, Coinbase was trading a bunch of these other tokens that the SEC wants to get under their purview. So once the SEC knocks on your door, they usually don't go away, Tommy. And so that's different between a commodity and a security. So the SEC is trying to get some of these other coins listed as securities, not commodities, so it'd be under their purview. So it's going to get dicey and uncertain, and I don't know how it's going to play out, Tommy. I wouldn't call myself an expert on cryptocurrency, but certainly I understand the difference between the CFTC and the SEC, Tommy, and that's what a lot of this is. The SEC wants to put their hooks in some of these other tokens that Coinbase had listed and allowed people to trade.
It's good. That was a great explanation, man. I hadn't even heard it really compared that way. And it's going to be so interesting, right, to see how the legal battles get played out versus what you categorize one cryptocurrency as versus a non-fungible token. Bottom line is, folks, many of those NFTs and many cryptos as well probably going to zero eventually, which is the mind-blowing thing. Coinbase, I've been talking about, in my opinion, Kevin, and I don't understand it well enough either. It seems like there's probably better areas in crypto than Coinbase because I don't understand the risks well enough, and they got a lot of risks right now in that company, and you just mentioned one of them, man, with the SEC knocking on their door. Well, Kevin, we appreciate you taking the time on a busy day, man, and a busy week, and we'll be watching at 12 o'clock today, man.
Have a great day, Tommy. Thanks for having me on.
Always a pleasure, man. Folks, tune in today. It's going to be a great one. Today's a big day in the markets. It doesn't get much bigger when you got all these tech companies. You heard their stocks they're talking about. I'm sure they'll do a great segment on Meta. I'm sure they'll talk a little bit of Fed decision as well at 12 o'clock Eastern every trading day. And we got the opening bell coming up in about 3 minutes, folks. We'll talk a little bit of that Coinbase yesterday in terms of, quite the slide when you talk about it. And Kevin put it well, man. You know, I mean, it's probably right what the SEC is saying, folks. I mean, I don't consider NFTs a commodity. I just don't. Companies are securitizing them and pushing them out to the public. Seems pretty simple, but we know the legality of things get a little murky. Nonetheless, Coinbase, they're in it. We'll be right back for the open, folks.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now, and you're looking at an S&P holding up 37 points. How about the NASDAQ 100 accelerating? You're up 1.7% right now for the NASDAQ 100. And the headline to kick things off, you got Google and Microsoft. And the headline from Bloomberg puts it well, man. There it is. Spur hope tech can handle a slow economy. Your Texas Instruments out there as well. Getting into the outlook real quick of the Microsoft numbers, right? An upbeat 2023 sales growth forecast. So this is kind of what popped in at about 6 o'clock p.m. Eastern time. On the conference call, they said they expect revenue and operating income to increase at a double-digit pace for fiscal 2023. That ends next June. Currency fluctuations will cut sales by about 4% for the year and about 5% in the current quarter, tempering worries that the strong U.S. dollar would have an even bigger impact on the value of overseas sales. The forecast was shockingly strong. Notable analyst Dan Ives from Wedbush says the forecast will be the guidance heard around the world and street. And you saw the acceleration, man, on Microsoft. Let's check in on Microsoft right now. There was your pop last night. They open and give it back a little bit, but you're up about 3% from Microsoft shares. We check into Google. Whoops. GOOG or Alphabet. Up 4.2%, trading at 109.61. Let's check in on Visa. Pretty strong numbers for Visa. They're down about 0.75%. Boeing had some decent numbers, up 3.6%. Chipotle Mexican Grill. They're selling some burritos at Chipotle, up about 9% on their numbers to $14.34. And on the flip side of that news, Shopify. They're out with their numbers. You dive lower, you're back to 31.41. They dived lower yesterday on the news that they were cutting 10% of their workforce ahead of their numbers. And pulling up their numbers, the warning of a weak outlook and bigger losses. So activity has reset to pre-COVID trend line. Now, that was kind of the news yesterday. They're cutting 10% of the staff. They expect operating losses in the third and fourth quarters to exceed those in the second quarter when it lost $190 million on an operating basis. They cut 10% of the workforce. We now expect 2022 will end up being different, more of a transition year in which e-commerce has largely reset to the pre-COVID trend line and is now pressured by persistent high inflation. Folks, we got so high above that pre-COVID trend line to pull it all back. The dour outlook and the job reduction came with an admission from the CEO that executives had misjudged the durability of the pandemic-related boom in online sales and that the company's rapid expansion was unsustainable. Now, here's the thing. You're trading at $31, right? Let's put this thing back at least 5 years, okay? You're back to prices that you were trading at, 6 months before COVID. If you were on a trend line, you should be trading a little bit higher. So what's the case here? The case is, well, either those numbers have really reversed. Maybe the economy isn't as strong as you thought it would have been. Maybe the market got ahead of itself, okay? In the beginning of 2019, this stock was trading at about $13. Still a three-bagger over that period of time. At the beginning of 2018, you were trading at about $10. I'd have to look at when TFNN transitioned to being on Shopify. I think it was somewhere around September 2019. I think we're approaching 3 years on that platform, something like that. They've had tremendous growth, but man, they are paying the price today. Now, here's the interesting part, okay? We jump from that to Kathy Wood. So I talked about that she sold some Coinbase. Let's see where, I think I had that one up. Did I? Let's see if I can find it. Well, no matter what, if I had it up. Yes, there it is. Dumps Coinbase shares for the first time. She bought some Shopify yesterday, which is why this is going to be the transition. They sold about 1.4 million Coinbase shares on Tuesday. The one thing I'll say is I do pay attention when she cuts and runs because that means the game has changed. She did it in Zillow. She was huge in Zillow, lost $1 bajillion. And they sold immediately when they got out of the buying and selling of the house business because that's why she was in that business, okay? She got punished, man, because she didn't get out at the indications anything was wrong. She got out when they literally said, we're not in that business anymore. It doesn't work, okay? Well, she held on to Coinbase basically for max pain, but maybe she would agree with Mr. Kevin Hincks that when the SEC comes knocking, they may have a case. And if you're talking about all of these different things are going to be securitized, that's a tough one, folks. So she sells 1.4 million shares of Coinbase. The stock was trading big time lower. They're worth about $75 million as of the close. Now, pulling up her transactions yesterday, okay, this is just a generic site that tracks some of the transactions she makes. You can see in here, there's the sell of Coinbase yesterday, okay? About 1.13 is what they have listed here somehow. I guess the article says about, what, 1.4? Is that what it said? What she said, 1.41 million shares. Nonetheless, she sells. It's about almost a full 0.7% of the fund. Excuse me. Keeping track of what she bought here, you had 414,000 shares of Roku. You had 1.3 million shares of Shopify. So she's looking at that pullback yesterday as still a buying opportunity in Shopify. Doesn't mean she's going to be right. Interesting nonetheless. Roku's an interesting one as well. They have their numbers coming up on Thursday, I believe. Jumping over to the Analyze tab on the Thinkorswim platform, playing with some theoretical ones down there. Earnings. Yes, they are out with their numbers on Thursday. Roku shares out with their numbers, and you're talking about almost a 15% move expected. This stock, whoo-wee. You talk about some volatility, man. We were just at 97, then you're at 77. Just like that, within a span of about 3 trading days on Roku. You pulled it back to the daily. I mean, this thing's been chopping around. You can see between about 75 and almost 100 for the better part of almost 3 full months. Quite a trading range on a percentage basis. Kathy Woods, yesterday, is that right? Yeah, yesterday. You can see, though, that thing at about $80. She's adding to that position at $80. Excuse me. Interesting nonetheless. All right, let's jump around to what else we have going on. Boeing shares, jumping into their numbers real briefly. They lost 37 cents versus an expected loss of 14. They missed on revenue as well. Kevin mentioned it, top and bottom line, some tough deals, but not quite as bad as the market was maybe thinking. They swung to an operating cash flow of $81 million in the quarter after burning $483 million in the same period last year. That's probably a big part of it, folks. Okay, net income of $160 million, down 72% from a year ago. They are pushing out planes. The number of planes deliveries rose to 121 in the second quarter from 79 a year ago. Revenue rising 3% to more than $6.2 billion. They are preparing to resume deliveries of the 787. Most of the planes that they delivered were 737s, was what they had in there. But Boeing, they were a little higher. Let's see how they're trading. Still up about 2.5%. Now, this one's an interesting Boeing. You take a look at the weekly. Maybe we're getting back into that trend line, right? Quite a trend line to the downside all the way from March of 2021, a year and a half. You break out of that trend line, what do? We're right back there. Interesting to see where we go from there. All right, let's jump over to Meta. They got their earnings after the bell tonight, getting a lift with some strong Google numbers. Google was probably the most surprising of all. Did not have any trades last night in any of the tech stocks, nothing Visa really. But if I had to place a wager, I probably would have bet that Google might have the toughest haul of them all. With all the rhetoric out there, our man Basil Chapman's next, folks. He had a great segment on my dad's show last night talking about everything is negative you hear, right? That's how they kick things off. Everything about the ad business is negative, right? Well, if somebody's going to pay the penalty, man, Google, the online ad behemoth, not much the case. Up 4.4% right now. Microsoft up 4.7% right now. Stay tuned, folks. We're coming back with our man Teddy Kegstat, the Tiger Forex Report.
TFNN
Right back.
has been your trusted source of analysis for bonds, metals, stocks, commodities, and options for years. And we are happy to announce that we are bringing that same caliber of analysis for the Forex market. Teddy Kegstat has 30-plus years of experience in Forex trading, commodity risk management, Forex hedging, volatility, and so much more. Teddy releases his weekly Tiger Forex Report every Monday morning with elite coverage of all major currency pairs, including the DXY, Euro dollar, Pound dollar, Aussie dollar, dollar yen, dollar Swiss franc, and so much more. Teddy will recommend specific trades when the market presents them and provide updates throughout the week when warranted. For the month of July, inaugural members to the Tiger Forex Report will receive 25% off the monthly subscription for as long as they're subscribed. Just use promo code TEDDY25 to lock in the added savings. This offer is good only for the month of July, so do not miss your opportunity to save on the Tiger Forex Report. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets catching a lift. We're up right now 42 points. That's 1.1% in the S&P's trading at 39.65. And right now, folks, we're going to jump over to our man Teddy Kegstat. And folks, if you haven't checked it out yet, on the front page of TFNN right now, the Tiger Forex report by our man Teddy. This kicked off about a few weeks ago. Teddy puts out updates every Monday with a full report on the Forex market. He talks crude. He talks the 30-year bond in there, as well as many of the main pairings that you look at. And in this environment, folks, Forex, notes and bonds, energy prices, crude, driving so much of what's happened. You heard our man Kevin Hincks talking about the crude contract as we kicked off the program, trading at $95 now. The last time the Fed was meeting, you were at about $120 coming into that. And folks, this is the last week. I encourage you to sign up for Teddy's report. Enter the code TEDDY25. You lock in 25% savings. You get the newsletter from a month. Worst case scenario, it still comes with a 30-day money-back guarantee. And we got a lot to talk about this morning on Fed Day. Teddy Kegstat, good morning.
Good morning.
So, where do you want to kick things off, man? We got some action in notes and bonds. We got a little action in the crude contract, volatility persisting. And, of course, we got a Fed decision at 2 o'clock today Eastern time. Teddy, where's your head on where we kick it off in the conversation this morning?
I'm waiting for 2 o'clock to come and go so things can get back to normal trading, to be quite honest with you. So.
Now, as a Forex trader, do you try, do you have an analysis? Are you looking for 75? Are you looking for 50? Are you trying to square what's going to happen in that type of scenario? Or are you just letting the chips fall and then making a plan of where the Fed comes in at 2 o'clock today Eastern?
Right now, my viewpoint is that they're probably going to do the 3/4 of a point, which is pretty much the expectation. I think the full point is off the table. I don't really think they're going to do that one. I would be surprised if they do. I think the biggest thing is going to be the speak afterwards. I can't see that they're really going to change anything. Just because they're already everyone knows they're behind the curve already. So I think they're going to be very cautious on what they say, especially with the numbers, how they've been coming out the past month or two. And remember, we don't have another Fed meeting now for 2 months. Yeah. So I think what they're really going to, that gives them time to begin with. So I think what they're going to do is just give you the same blah, blah, blah they've been giving you and say that they're going to reevaluate things, over the next couple of months as the economic numbers come out. So what's interesting is that the interest rates have been rallying the way they have over the past week and a half, especially. So, and we've come up to if you look at the 30-year and the 10-year, on a daily basis, you pretty much have a reverse head and shoulders breakout that occurred kind of is forming right now. So but the thing is, the resistance level we're coming at now is also an extreme. So if they raise 3/4 of a point with an expectation of another 1/2 to 3/4 in the September meeting, it's going to be hard for the interest rate markets to hold these highs right now, because you remember, it's the market that's bringing these rates down right now, not the Fed. The Fed is pushing for higher rates. So I think you're going to see, no matter what, it's a Fed day. I always tell people, unless you're in a trade, work managing it, don't get into a trade until after this is over, until the next day, because the algos are going to be firing on all cylinders, especially in the last hour before the Fed meeting, so you're going to have a lot of thin volume, some phantom moves where you're just, if you look at how the dollar is traded in most of the pairings, and even how the interest rates have traded over the past couple of days, and especially the last 5-6 sessions, all bulls and bears are getting slaughtered, especially the weak ones. If you're just dabbling in the market, trying to get a long or a short position on, you've been getting just chewed up. There's no real follow through. We're going to start to see either a continuation of the trend going on right now, or we're coming to an inflection point where I think we're going to have a reversal. In my opinion, I think we're going to see the reversal, because the bond market, we had some auctions, and now we come into this number. After this, we have 2 months before the Fed's going to do something, and I think we're going to start to see the rates go higher in the market, meaning the bond prices and 10-year prices going down. And then that'll bring strength back to the dollar as well.
Yeah, that's pretty cool. I had it up, the head and shoulders on those formations on the 30-year, on the 10-year. Some pretty wild moves late last week, right? In the 10-year and the 30-year. The 10-year was up 3 full points, man, as the yield on that 10-year was diving lower coming into this meeting. And I would agree that I think this meeting more so, there might be a lot of nuance on how you can interpret what the chairman says, because he's not going to have a lot of concrete data to actually go off, right? You got 2 months. Right. The last inflation number we got was 9.1%. We got 3.6% unemployment. What else is he going to say? But we're going to wait for the data, and then maybe he'll slip in a little word that people might try and interpret. But nonetheless, man, it's going to be a waiting game for that data, because you make a great point. 2 months, we're going to get so much data by the time they have their next meeting. It almost doesn't matter what he says. And, of course, it always matters what he says, folks. But in that context, man, there's just going to be so much data out before their next meeting. That's kind of probably what he's going to point to, as has been the case. Jumping around, let's talk a little crude, if we could, because commodities, we talked to him about Kevin Hincks. He made a great point in terms of, one thing he may talk about is energy prices, where they are this meeting versus last meeting. We're kind of sitting near the lower area of support for crude recently at that $95, $96 range. What's your take on the crude market right now?
Well, it definitely has stabilized. That's for sure. It's obvious by the charts. I'm still a crude bull. I think that this is just a little pause before the next move higher, and especially now once we get through this Fed meeting, if they keep this stance of higher interest rates moving forward and are really still very strong in that stance moving through the rest of the year, I can't see how crude oil prices and commodity prices aren't going to get a rebound. So you got to remember, we've had such markets go out like they come in. We've had such an accelerated move in these trends. For us to come back and consolidate like we're doing, that's not a bearish thing. That's a profit taking and an adjusting to that overwhelming strength. So there's no real forces that are going to really make us say that crude oil is going to go down. Especially because OPEC's at maximum production. Russian oil is not making it to the market, except for, unless you believe the rumors, there's an underground market being, moving oil around. But, as far as moving with Europe, you have more energy restrictions, especially oil. How does that make oil bearish? Because the demand for Europe, they're looking for other sources now, and that's going to make, the transportation issue, the whole logistics of everything, that changes their infrastructure and how they have to move things. And these things don't happen overnight. These things take half a year to a year to manifest. And we're heading into winter time. So, and that's what I have to tell people, if you look at how we've had this pullback in heating oil and natural gas and gasoline and crude and stuff like that, well, we're on the verge of wintertime. We've had a very soft summer. It's hot, but as a whole, we've had a decent summertime conditions. What happens? We haven't had any hurricanes. We're heading into hurricane season. You know, I mean, you live down in Florida. I don't got to tell you that.
That's why I was going to chime in and go, man, there's always some hurricanes. We're coming into August that roll through the Gulf, and that always gives a little volatility to crude, especially along with everything else. Yeah.
Right, you know, and so, and I mean, unless we somehow pass through all this, you know, you never know. We could get really lucky with the weather. Maybe there's something that eases the things between Russia and Ukraine, and also the talks between Russia and Europe. If that would happen, well, then I could say I would start to become more neutral to bearish on oil. But I think right now it's really just a resting point before it starts to go back up and test the highs.
Hey, can you hang with us for a few more minutes at the end of the program?
Sure.
All right, perfect. We're going to talk the yen, folks. We're going to talk a little bit of euro when we get back here. We'll finish it up with our man, Teddy. Stay tuned, folks. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up 1.1% right now, jumping over to the dollar yen. We're talking to our man Teddy Kegstat. And folks, if you haven't checked it out, head on over to the front page of the TFNN. Check out the Tiger Forex report this month. Code Teddy25. You save 25% forever as long as you subscribe. Teddy, I have a chart of the dollar yen up here. A little bit of a pullback over the last couple weeks. We're up a bit over the last few days. What's your take on the yen, sitting at about 137 right now?
Well, if you look at it just on a technical basis, if I remove all the geopolitical and the Fed and central bank stuff right now, if we didn't have a Fed FOMC meeting today, and if, let's say, the yen settled where it's at right now after this little 3-day little pause, and its bearish tone, I would say it's actually looking kind of bearish, especially if we were to, let's say we settled where we're at right now today, forget FOMC meeting, and had a sell-off, say, tomorrow that took out the low from a few sessions ago. That, to me, would be a very bearish indication because we really stretched the support on this correction. Now, overall, this trend is so exacerbated that it doesn't mean that this correction is really that extreme. But if you just look at it technically, not taking all these other things to account.
We like the technicals.
That's looking like it wants to. It's like it wants to sell off. Like this is a rally to sell. However, I think after the number, especially because we have a 2-month reprieve now. I mean, the Japanese central bank has not done a thing. Their finance ministry has not done a thing. So unless they come out and do something while our Fed's doing something today, or some news comes from them that they're not going to they're going to pull the trigger. I see a rally coming, where we can take out the highs and go up to 140, even 145 before the next Fed meeting.
Wild stuff, man. Especially, and I had it on a daily. I put it on a weekly. It's looking pretty parabolic at some point, man. From almost 100, right, to 140. Remarkable.
Right.
And we only have a few seconds, Teddy. What about the euro dollar as we wrap it up? Just above parity right now. You still looking for under parity?
I am. Nice, especially, if you look at how it's traded the last 6 days, the pound, the dollar, the pound dollar, and the euro dollar has been really choppy, and I think it's really ready to sell off one more time.
Teddy, thanks so much for the conversation, man. We appreciate it as always. We'll talk to you next week.
Sounds good, Tommy. Take care.
Take care. Folks, check out the Tiger Forex Report on the front page of TFNN.com. Basil Chapman's up live next. Have a great day, folks. Stay tuned.